How's it going? It's Rocky. Welcome to week 19 of our trading journey in the year 2024. Two topics that I want to discuss today. First topic will be our week's performance, so stick around to see if we were able to recover the horrible loss that we had last week. And topic number two, I'm going to do two trade analysis on some of my trades today, just to show you what my thoughts are with my exit strategy, and that is currently what I need to be able to handle the dynamic drawdown that Apex has. But before we get started, just a quick disclaimer. This is for informational and entertainment purposes only and should not be relied upon as a basis for investment decisions. For topic number one, let's go through our performance for this week, which I do post on YouTube and other social media mediums. Something new I added this week is the suffix, as you can see right here. The reason for this is I need to keep track of the numbers on Excel sheet, and since I was hiding it previously, it was harder for me to go back to see the historical numbers should there ever be a discrepancy on the Excel sheet that I'm using to keep track of how I'm doing. So I added it there, and the other reason is for transparency's sake, right? I want you to find this relatable so you know what PA number I'm at, and you can see right there, they're all right there. I'm not hiding anything. And the other new thing this week, something that I've been trying since December 2023, and I mentioned in the content last week, I was finally approved to trade on NinjaTrader, which I had trouble with in the past. I deposited $1,000 in that account, and for this week, we got that up to $281.84. So that's a 28% ROI, so that's not too bad. And at least with this money, I can withdraw at any time. There's no restrictions. It's my own money, right? And out of these 20 Apex that I showed here, we also have our 21st PA, which is the TopStep, which is this account right here. And then the remaining accounts that is showing there is essentially evaluations. And the evaluations are from Take Profit and from Trade Day. So that's the entire summary there. So you can see here on the cash value, I'm glad that we're finally back to above 25,000, right? After a horrible week last week, we were able to bounce back, and you can see the profits here are ranging from $166 to about $171. And if we go to the ATF website, you can see here, these are the 20 PAs that I do have. And as you can see from the chart here, this is the zero line, and you can see that most of my profits are more or less between $0 and $200. So I'm going the slow process to get to a static drawdown. I did have a bad day, which I mentioned last week, which was this one right here, about $1,000 on that, which erased a lot of my progress early. But right now on this account, you can see we are on day number 17. And on day number 17, we are at a P&L about $167 for one of the PA accounts that I'm showing here. And the goal is, again, it doesn't matter how long it takes me to get there. The point is I just need to get to the static drawdown, and hopefully from there, we can adjust our trading and have bigger profits. But for now, I just wanted to show you all these 20 accounts here. And let me also scroll down just so we can see all the other accounts. And you can see right there, these are the 20 accounts, not hiding anything other than the account number. I'm showing all the suffixes here. And if you can count that, that's about 20 of the performance account. So that's the ATF. Next, we're going to switch to the TopStep, which is my other performance account. And with the TopStep account right now, it's not doing so well compared to the other account. The total for this account right now is at negative $632. That's because I had a max loss for one day a couple of days ago of $1,016. So that took away a lot of it. And let's go down to the chart here so we can see this a lot clearer. So I've been trading this a total of 8 days so far. And as you can see here, starting line was at 0. And then on the first day, unfortunately, we went negative to about negative $300. And then from then on, we got ourselves back up above the zero line, which is great. Unfortunately, I had that horrible day that was a negative 1,000 for that account. But what's great is since I have issue with the trade copier on trading the XFA, which is the account that you'd call the funded account for TopStep, I've been trading this separately, which I started to use to my advantage right now. So we all have bad tendencies when we're trading, and I want to focus on those 20 as conservative and as boring as I can be. So any urges, bad urges I may have, I am trading it on this account. So think of it as a hedge. So I'm getting all the bad juju out on trading the TopStep so I can save the other 20. So think of it as a hedge in a way, not in a financial sense, but technically, I guess it could be financially because I am saving the other 20 count. So this is the Excel sheet I've shown in the past, and how I keep track of my progress is by listing the ending cash for each of the funded accounts. So as you can see, this is the photo that I post on social media, and that's really one of the main reasons why I added the suffix. Should I needed to go back and double check a number, it's easier for me to go back and forth to see what that number was. And based on these numbers, I do a sum onto this page right here. And you can see for the week, it was almost a perfect week, really, other than the loss that I had on TopStep. Each of the days were pretty much green, and happy to say that we were able to recover $6,171.88 for the week. That's not enough to recover the losses from last week, but it's still progress, and that's all we need, right? A bit of a progress to keep going. And as you can see on the week, we started the week at negative 3,000 on the beginning cash, and for the end of the week, we are at a positive $2,700. So pretty great progress on the funded account. And the other tab that I do want to share is the NinjaTrader self-funded account that I have. So as I mentioned, I put $1,000 on it, and for the week, if you look at the performance, it's pretty similar to the funded accounts because I was trading them together. And with this one, $1,000, that actually allows me to trade up to 2 E-minis, but I don't want to risk it, so I'm just trading only 1 E-mini. And the purpose of that 1 E-mini also is that restricts me on my funded accounts from trading more than I needed to. So this is a limitation I put on myself, and I am okay with that. And with $1,000, I grew that by about 28%. So that's pretty good for the self-funded account. So anything is possible. My goal again is trade the funding firms and get the capital back so I can go back to trading my own money. So topic number 2, I just wanted to go through the trades that I had for today, Friday, May 10th. I'm recording this specific one around 1:27 p.m. in the Pacific Coast, Friday, May 10th. So that's why you may see some movement still in the charts because the futures market will be open for another 30 minutes. US market already closed, but there's still a slight movement after hours per se in the futures market. So what I have up here, if you're fairly new to my content, it's on the left is a time-based chart, and on the right is a tick-based chart where I use Heikin-Ashi candles. And what I'm showing essentially in this period here is the entire day starting from 3 p.m. yesterday. That's when the Globex starts for the futures. And that's what I'm showing here on the time base on the left, and on the right is the tick base. And if you look on when the US market occurred, it would be based on the volume. If you look right here, that's where you can see that really most of the activity occurs on the US market compared to how it is down here during the Globex, where you barely see any histogram at all for the movement of it. And then if you compare to the right on the tick base, you can see that the volume is all the same because each candle there represents 512 ticks or 512 trades. So that's why I like using the Heikin-Ashi. All right, so I'm going to zoom in through all of this. Just want to do 2 trade analysis on what we did here. And I'm going to zoom into this first trade right here. And I'll zoom into the corresponding one on the right as well on the tick base side. And okay, here we go. So why I entered or not Doesn't matter. You have your own system. I'm not going to push my system on you. And even if I did, I still take it with a grain of salt, right? And I'm not trying to sell any course about it. But if you are curious, you can check out my previous videos, or you can read the description on the system that I use when I do enter a trade. What I want to focus on is just show you what my thoughts are and how I've been managing this dynamic drawdown with Apex, right? Which we all know is very difficult. Some people will say end of day drawdown is better. That's why I have other accounts. I have an account with Take Profit, TopStep, and Trade Day. So, there's pros and cons for all these firms, but I try to trade it only one way using the Apex Trade Copier. So, on this trade that I want to discuss right here, I entered at 39,557. So that was my entry right there. 39,557, which is the white line. And as you can see from this trade, I had a bit of a drawdown that I had to see through. So what normally happens is once I enter, I have a more or less a 1-to-1 risk to reward ratio. And this is not to scale, but normally it's a plus 50 up here and it's minus 60 down here. And that's why I say it's roughly 1-to-1 risk to reward ratio. And I always enter with only one contract. Okay. Total of one contract that I enter with. And basically what happens is if I ever see some room in the profit, if I'm ever above this white line right here, what I would then do is I would move the stop that I have, I would move it up above the white line just to lock in the profits, because with Apex, because it's a dynamic drawdown, you'll be punished if you had an unrealized profit and you lost all of that and you fell below your break even. And that's why a lot of my results has been pretty conservative. And this is just how I'm managing it. I'm not saying it's the right or the wrong way. You have your own process. You got to do what you got to do, right? So what happened with this trade was you saw that I had a bit of a drawdown here. And if I take a look at the candle, I think the low of that was about 59. So in reality, I had about 18 points drawdown. And that was my worst drawdown on this trade. And you'll probably ask, how do you manage that 18-point drawdown? How I manage it is because of how I started my trade going in. I already told myself that I was going to risk up to 60 points. So anything that happens between my entry and 60 points, it is what it is, right? However, once I'm above my break-even point and I had a little bit of profit, that's when I will adjust my stop into profit. So I will adjust that into profit, and that's what happened here. And essentially, what then happens is I then have a new bracket, right? My bracket will, let's just say roughly, it'd be right here. And this one that I have on the limit here, I would also bring it down a little bit to get it closer to where the candles are. So at that point, we now have that delta. Let me use a different color here to differentiate it a little bit. So my bracket then at that point looks like this, right? And the price is in between there. And what happens then is as the price moves up, I'll either move this limit closer or adjust the stop more into profit. And the reason I'm doing that is, again, the dynamic drawdown is pretty tough to trade. And that's why my profits may not seem amazing at all, but my main goal right now is not to have huge profits. My main goal is to reach static drawdown. So in the future, I can let my trades breathe a little more. So with this one trade that I had, what happened was with the entry of 577, I ended up getting stopped out at 590. So that's about 13 points. So I will bring the calculator. So with 590 as our exit and our entry at 577, like what I mentioned, 13 points, where 1 point is $5, since I'm trading the Dow Jones Industrial Average, times 5. That's a total of just $65. And with 20 accounts, I mean, really, times 20, that's $1,300, right? So you can see the compounding effect of 20 accounts, and it's pretty dangerous if you go the other way. And that's the main reason why I treat it like one account, so I don't panic. and hopefully, it goes to the right direction. And so far this week, it was a pretty good week. And next, I discussed that on time base. Just want to show you what I see on the tick base. It's a lot smoother when I look at the tick base here. This is the same entry that I mentioned. So just gonna do a quick drawing of what I did earlier. Not to scale, okay? So this was our entry right here at 77, and then 1-to-1 on my bracket, more or less, where it's plus 50 up here and minus 60 down here. And if you ask me why are those your numbers? Well, just trading over time, that's just the number that I feel comfortable with. When I traded my own money, to be honest with you, I would even have a stop that was 100 points because I didn't have to worry about the dynamic drawdown. But really, this is just the sweet spot that I found for myself. And you just got to determine that with more chart time, right? You'll determine what that is. So with this one, just looking at the screen, you can see that I just had that one candle that, got me worried a little bit. But again, it was within my allowed max risk, right? That's why it's so important to determine their max risk before entering a trade. And with this one, as you can see, I used to have a lot of FOMO. I mean, I still do, right? Once we exited, you can see lots of action that still occurred there. If I left it alone, let's just say I could have had another 40 points or so. But right now, what I care about is just locking in consistent profits. All these trades where it'll run away, well, we'll have more probability of that occurring once we hit the static drawdown. For now, it is what it is, so I'm just letting it be. Anyway, I lied. I'm only going to do one trade analysis, not two. Give me some feedback if you would manage this a certain way. I'm curious what others are doing. And also let me know if you want me to do these type of analysis more moving forward. Anyway, thank you for joining me today. I appreciate your time and helping me grow the channel. I know that my content is hopefully relatable because that's the main reason why I started the channel. I used to watch a lot of YouTube, but I never saw much transparency, which I always questioned, right? Were they really making money from trading, or were they making money from their courses, which I do not have, their chat rooms, which I do not have? The only way that I do earn money is from the YouTube ads, so I do thank you for your support. Just for transparency, I do have some affiliate links in my description, but it's not something that I promote too often. All right, y'all have a good one, and I'll see you on the next one. Thank you.